It's 6 digits.
What's up, guys? Welcome to another episode of Six Figures to Bigger Figures. This is my story of how I inherited, lost, regained, and will surpass a six-figure net worth. I'm going to bring you guys along with me for the journey. The only thing I ask is that you like, share, subscribe, and follow at 6FTBF. All right? Now, before I get started, I would like to say, since my last episode, we had an addition to the family. I had a boy. Yeah. We had a boy. I guess my wife had something to do with it too. You know what I mean? But super excited. All right. But also this week, taxes were due. And I figured it would be very appropriate for me to talk about taxes, seeing that it should be, or maybe it's fresh in some of your minds. It was definitely fresh in my mind. All right. So what we're talking about today? Taxes. Taxes? Taxes. We're talking about taxes. Yes, taxes. So what are taxes? Taxes are the government's demand that you contribute towards the nation's budget. And this is by law. You don't have any choice in this. You don't have a say in this, okay? And it's punishable by jail, you know? Shout out to Wesley Snipes. And I don't mean that in jest, you know? He did that so you don't have to. You know what I mean? Respect. So, what you pay is dependent upon what you make. But what's even more important is how you make it. Okay? So, should you be excited by a large tax return? Fair question, right? Because some of us are. So why do some people get excited when it's tax season? Well, the reason being is that those persons get a big refund. Keyword here, refund, okay? Means you paid that money already, okay? You're getting back an overpayment. So unless you qualified for what they call earned income tax credit, which if you're a single person with no dependents, that would mean that you would have to make less than $16,000 in 2020. All you're doing is getting back money you already paid. In fact, it's not free money at all, okay? In fact, it's the opposite. You've actually given the government a no interest loan. Interest-free loan. You just gave the government an interest-free loan. They take your money throughout the year, put that money in an interest-bearing account, and then when you file your taxes and say, oh, you overpaid, then they give you what you overpaid and they keep the interest. So is that a good deal? I don't think so, right? You need to be in control of your money. You should have your money throughout the year. And this is what I tell all my clients. So you guys are getting some free tax advice right now. Excuse me. Hit up this water. What's that about? I'm going to give you guys some free tax advice that I tell all my clients. I tell my tax clients that if you're getting too much of a refund, you need to make some withholding adjustments, okay? And if you're paying too much, you should make some adjustments there as well. But you should strive to have control and access of your money. That's how you can make better decisions. That's how you can empower yourself to pay your debt and to invest your money to businesses, stocks, what have you, right? That's what you want to do. So why do some people get angry during tax time? Easy, because they have a tax bill. And no one likes to be surprised with bills. No one. Top 5 dead or alive worst feelings. So where should you be on this spectrum? You should be resolute, okay? Understand it, plan for it, and be smart about it. And what do I mean by being smart about it? Well, for one, the worst way that you can make your money is through traditional means. Meaning you go to a job, you have a 9 to 5, you get a W-2 at the end of the year. Statistically or mathematically, that is the worst way you can make money. That's just how it is. And this is why I say that. Well, this is why it is. The income tax rate imposed by the IRS ranges from 10% to 37%. The tax rate on capital gains or qualified dividends ranges from 0% to 20%. In fact, you can make as much as $40,000 through capital gains or via dividends and pay zero, nada, goose egg. However, if you made that money through traditional means, you'll fall into the 12% tax bracket. So what are we doing, right? Or what should we be doing? If you were to make $100,000 a year via W-2 income, your effective tax rate would be 18%. If you made $100,000 through capital gains and through dividends, your effective rate would be 4% lower, 14%, or $4,000. So we need to be thinking about how we're making our money. We should try to shift our money as much as we can into vehicles that not only empower us, but also give us a tax benefit, right? We end up paying less taxes as a percentage of your income, making these decisions, going this route. Okay? So for those who never understood why years ago where Warren Buffett mentioned, hey, the tax code needs to be reformed because I pay less in taxes than my secretary. He's not talking about the absolute amount. He's talking about the percentage. And he was right in that case. By percentage wise, he was paying less taxes. Also, as an entrepreneur, you also have more opportunities for tax deductions. And you get what they call a qualified business income deduction. So what should we be doing? We should be striving to have our tax returns include schedules such as Schedule C, Schedule E, D, K1s, 1099 DIVs. That's where you want to be. And that is how you beat the system. Not beat the system, but that's where you want to be. All right, let's go.
It's 6 digits.